Yo, what's up? This is Patrick from TSH FX Institute, and today I want to show you this little pattern which I showed you in the previous video. So as we can see here, we have the low of the week, which was our peak formation, and as we can see now we have momentum to the upside, and you can see here's our pattern. We got the accumulation right here. Accumulation, we have our accumulation here. Let me just put it in some small words so it can be a bit smaller. We have our accumulation, then we have our stop hunt, and then we have the real move. So let's see how we identify where the stop hunt is, where the accumulation is, and where the real move is. Okay, so as we can all see here, we have our accumulation range. This is our accumulation range. The gray box, from 12 o'clock until 8 in the morning, and then from there on, I told you guys that the market will give us a push to the downside. So the market gave us 3 little pushes, which was a stop hunt. Then the market gave us the low of the day, and then the market traded away from the low of the day, came back and to hit again the low of the day, which gave us a W, which was our confirmation would have been on the second leg of the W, and our profit would have been just here, about here, near the low of the day. So this would have been our entry. Let me see, our stop loss would have been right here. So it's a small risk, and our target would have been already 50 pips, or if you just made like 100, if you make 100 rand, it will be also good. If you went for 200, it's also good, and from there on we're gonna see whether the market is coming to reach these areas. But for now, you would have taken your entry right here, and then the market would have shot up, and then you would have trailed your stop loss. As your trade goes into profit, you might also be moving your stop loss into profit. So when the market reverses, the market is going to hit your stop, and then your trade is going to be in profit. So this is a very powerful setup, and if we want to see it in bigger time frames, there is also this kind of setup that I want to teach you guys. Let me show you guys. So right here, what we see is NAS 100 giving us a pattern like a head and shoulder. So this is our head, and this would have been our shoulder, and again this would be, okay, sorry, mistake. Okay, so these are our 2 shoulders, and from there on we will have our head. Here is our head. So it's a head and shoulder pattern. So you can see this is our left shoulder, this is our head, and this is our right shoulder. So it's also a very strong confirmation that you're gonna have a reversal. So this is a very wonderful trade, and just checking my previous videos, you will see that I've shared these kind of setups, and they are one of the most powerful setups that you can ever find there. Okay, so let's move to another pair and see if we can find a similar pattern. Okay, this is gold. Great, this is gold. Let's see what we have on gold here. Gold here we have this is our peak formation high. This is a high of the week. is high of the week. Is our pre-formation high, and then from there on the market dropped. And then as we can all see here, let me just draw here, from this point we got our Asian box. This was our Asian box from 12 o'clock until, let me say, 7 to 8 in the morning. So we are actually in South Africa, and this is our time zone is GMT plus 2, as we can see here. Yeah, it is. It's GMT plus 2. So if you look at this pattern, it's now the same as the one which I just showed you, but if you look at this pattern, you will see something here. So this was our accumulation. Let me just draw it here. This was our accumulation. Okay, and then after the accumulation we had our stop hunt. The accumulation we had our stop hunt, and then after the stop hunt we got our M pattern, and then the market dropped. So this is our stop hunt. So the stop hunt will usually be 25 to 50 pips out of the gray box. So we can see here is our M. It's this is our entry at second leg. This is the M, the entry on the second leg. So we will just enter right here, just right here. So we will just enter right here. As you can see, the market came to this area. Market came to this area where the first leg were. The market failed to break. As you can see, market pushed a little bit up. Let me go into a smaller time frame. Okay. So we can see here the market pushed a little bit up, but for this you can see for some people who are using robots and all those kind of systems, you will see that usually this is where those robots and system, or those are the things people use, like the robot system. That's now where they will show you that it's time to buy. Yeah, they will show you it's time to buy just right here. But we who knows how to trade like a market maker, we know exactly what their move is. So you can see this is a railroad track. We call this a railroad track. Two candles of the same size, and you can see, just look, after a few minutes, just look how the market rolled. So this could have been your target. 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 And okay, so this is the real move. This is a real move. It's a real move. So we trade this move. So if we just zoom out this chart, we will be able to see. Let me go into my 15-minute time frame. We'll be able to see. Let me put it nicely for you, so you can see where we have accumulation, the stop hunt, and the real move. So for this trade, look, you could have taken position right here. This could have been your entry. Let me just show you here. This could have been your entry right there, and you're gonna risk a small percentage of your account. Let me say, for instance, here it's also a nice risk for this trade, and your take profit could have been right here. So for you, if you want to swing your trade or hold your trades longer, you will have to trail your stop loss in profit, trailing your stop loss in profit. But one thing you must know is the market will always reverse back and accumulate and to trap traders for the next day, and you can see it's actually what they are doing. So this was Nasdaq, and let me give you a full screen again. Let's just go into the 1 hour time frame so we can see what's happening here. So if you look in the 1 hour time frame, we can see the same similar setup here which happened on Nasdaq. So let me remove this. Let me just remove everything, remove my drawings, and we can see again it's the same pattern which appeared, the same pattern which appeared. So this is our left shoulder, this is our head, and this is our right shoulder. So these are patterns that you can trade. All you have to do is just wait for the right setup, and you have to practice discipline and also use proper risk management. So let me just show you how few head and shoulder patterns look like. So head and shoulder patterns, they actually look like this. This is how they look. It's head and shoulder, and if you see head and shoulder pattern on a bigger time frame, it will be a big reward if you go into the smaller time frame and go look for your entry there. So you'll be able to hold it for a long time. So okay, this is the old one. Sorry, this is the old one, not this one. Let me go. Okay, so we said that this is our left shoulder, our head, our right shoulder, and then let me go back to this picture. There's something I want to show you here. So this is the inverse head and shoulder, where we have our left shoulder here, the head, and the right shoulder, and then we have the head and shoulder pattern, left shoulder, head, right shoulder. And then if we look at these patterns which I showed you, it's not just patterns which I showed you, it's tradable patterns. And let's look at Nasdaq. So this was Nasdaq, head and shoulders. I took my entry right there and I went out here, and I got that small reward. And this is for gold, the same pattern which I showed you guys, and you can see I managed to take a screenshot of this one. So this is my first target. I had multiple trades in. The first target were hit, and I trailed my stop loss into profit, but I closed it and I left one on each pair. So if they reverse back into the range, it will hit my stop loss, and it will be a profitable trade, which means that if the market go hit my stop loss, which is in profit, it will close in profit. So I don't need to worry about anything. I made my target for the day, and my target for the day is actually 30 to 50 pips per pair, and it's not there each and every day, but I managed to get that, which was my goal. So I apply risk management, and I wait for the market to give me the right setup, and this is what is happening almost each and every day in the market. So hit the like button, subscribe for new updates, and don't forget to hit the notification bell for more updates here. And yeah, see you in the next video. Goodbye.